Good morning. Welcome back to another Market Open live stream. Let's see what's going on in the world of the markets today, because I can tell you already, we know that NIO's down because, well, NIO's like, yo, he's out of chips. In the first quarter, we thought we were going to break 20K cars. We're not breaking 20K cars the first quarter. We're going to be down at like 19.5 because we're out of chips, and we're just going to take 5 days off. This is pretty impactful. You know, this is the first time I think we've actually seen like a company freak out over the chip shortage. Now we've seen a lot of complaints, but this is a full scale shutdown for 5 days over at NIO, and not so good for NIO. NIO down about 6% here, down to about 35.69. Beautiful thing is these sorts of shutdowns are temporary, right? I mean, okay, so what? There's a little bit of a supply shortage. To me, these are the same kinds of things that when they happen at Tesla, they're just little nice buying opportunities. So, because ultimately you got to ask yourself, are you investing in these stocks to try to make a buck in the next 6 months and then go, oh, look how green my stock is? Or are you investing in these to build wealth over the next, 10 years? And when you have a long run mindset with companies you believe in, it don't matter. You're like, thanks for the discount. So what do we got going on today? Well, auto manufacturers or anything really auto related, apparently not super happy today. NIO, Blink, Churchill, Xpeng, Li Auto, all these guys down, and Shift, all these guys down 2% plus. So auto's not super excited today. Not sure where Tesla is in the bunch. We'll find it shortly here. On the flip side, of course, our ultimate hedge in the market is doing extremely well again. Look at GameStop, up 11.4%. Kind of incredible. A lot of volume coming in over here again. What an incredible, really just swing play. I mean, just day to day, the fluctuations are phenomenal. But anyway, Naked is beating GameStop a little bit. Rite Aid coming back a little bit after that big 20% sell-off we had all yesterday. IPOE jumping a little bit, 3% on news that maybe it'll give people access to IPOs before they actually IPO. I would not be shocked, though, for this to end up being a lot of clickbait, because usually IPOs, there's no lack of money for IPOs, like before they're actually on the market. What there's a lack of are these things called allocations, which is basically your right to buy a certain amount of shares. So I wouldn't be surprised to see it like, yay, cool, we'll get you in, like, let's just as an example, let's get you in the Coinbase IPO. You could buy $500 worth. And it's like, okay, that's not what it is. We'll see. I mean, I have no idea how much you'd actually be able to buy. But look, I think it's a great premise. But we'll see if you can actually get a good, decent amount of shares out of it. So let's see. Ubiquity's up 2% today, along with some of the other recovery plays here. Nordstrom, although NGA is up over here too, up 2%. United Airlines, so the airline's up about 2%. Nike doing well again here. Carnival, lots of recovery stocks again. So similar kind of rotation that we've just been feeling for really the last 4.5 to 5 weeks now. Pretty strong rotation away from tech, energy, which is really incredible, especially with Biden's infrastructure plan coming up. It's shocking. Let's listen to the bell. Here we go.
2000. So how can Goldman not make crush the estimates?
Yeah, Goldman is going to open about $20 or so, $25 or so away from its 52-week high. Jim, the bells are ringing at the big board celebrating its IPO. Chinese question and answer website, Jihu. Oh. And on the NASDAQ, also celebrating its IPO. Read up, we will speak to the CEO of the online resale company in Squat Alley. We are looking forward to that. What we didn't talk about yet, Jim, is, and I know you've been focused on it, every day, is oil.
Yes.
The Suez is still a situation. The ship is still stuck.
All right, we're not going to talk about the Suez Canal right now. Yeah, that'll get solved. So, all right, we're going to also pull up the Bloomberg terminal, but let's see how the actual opening is going here. Yesterday, we had a massive dip. We also, by the way, I think it's probably worth noting. Let's see here. This is, oh yeah, we did that yesterday. Yesterday, check this out, by the way. Go to metkevin.com/chargers. We're talking about sort of a basket of chargers that are really oversold right now. But anywho, take a look at this. It was kind of funny. Not that. Where was it? We want to just revisit the W here for a second. While we wait for the market. Yeah, look at this. I thought this was funny. Somebody clipped this. And it's kind of I really hope this ends up being right. So I want to pay attention to it because so far it's actually kind of aligning. Okay, watch this. And is go to your favorite stock that's burning all your money and look for the beautiful W and just draw a picture. Go to the 26th and pretend like you're in kindergarten, and there you go. Oh, look, it's a beautiful W again. Okay, cool. So, based on this highly advanced and professional technical analysis, all we have to do is buy the dip tomorrow or Friday. That was Wednesday. And so we did have that dip yesterday morning. So we'll see. We've got a little bit of red today. Certainly not what we saw yesterday. But hopefully we end up seeing that W, which is kind of see. Look, there's our line that we drew. So let's see if we can now get a nice green trend and we can follow the lines, because there's no way the stocks can't follow the lines, right? So we'll see. But anyway, it is the last day of the quarter technically, even though the last day of the month is next Wednesday, which I always think is very weird. But you can see a lot more rebalancing today. Not uncommon, by the way, for a lot of hedgies to just go, hey, let's go buy recovery stocks because that's what our clients and customers want. And at the same time, they're like, oh, look how terrible Kathy over at ARK Invest is, not exposing you to recovery stocks. It's funny because I would not be shocked. And it's just good to know if you're in recovery. There's no problem with being in recovery. It's just good to know. It won't shock me to see a rotation back the other way soon. We'll see. We shall see. But otherwise, ARK has been kind of down, obviously, the last 5-6 weeks. So NEO actually not down anymore as much, down about 5.1%-ish, bouncing around a little bit. Let's zoom into the 1 minute here and just see. Yeah, we've got an attempt at a recovery here at NEO. I'm going to keep an eye on this. I might want to buy a little bit. Let's see here. So, okay, we've got what's down? We got NEO down. Cost is actually falling down a little bit. Churchill, what else? Churchill, Twilio, BNGO. I mean, not a lot of red, actually. Like, these guys are barely red, some of these. Sure, Enphase 1% here, but and Tesla's over here as well. I keep the Tesla's bobbing around here, what, 1/3% down? I don't know, like, when it bobs around, it's so hard to see it. And GameStop actually is giving up its gains. This is sort of a weird little AM rotation here. Ubiquity 3%. ChargePoint is up. Let's see. Yeah, folks, the infrastructure plan, which I mean, look, it's such a big deal. It literally took out a whole section on it, like top to bottom. It's all infrastructure. And they kind of break it down into the three things. But anyway, the infrastructure things can be huge, and I really think society is almost underestimating how huge $3 to $4 trillion is. It's really just a mind-blowing level of investment. But all right, let's go ahead and grab the hoods of the Robin here, because why not? NEO and yeah, okay, buy. Let's go 40K. More margin gone. Now, usually, when I buy, you would hear it first and exclusively in the course. Which, by the way, that coupon code does expire today. But anytime I make a purchase, I send out a notification. Happen to make a purchase here, you get lucky. But I did just buy 40K, so I'll take $36 of NEO gladly. Oh, sorry, 40K, not 46K. I had 36. There we go. Okay. So let's see what other opportunities we have, sort of continuing to nibble into this. this never-ending dip. It'll end. And that's the important thing to remember too, is these things come to an end. This one, there we go. So, okay, Neo's stable here at about 36. So keep an eye on this. We'll see what happens at Neo. See if it falls some more. We can always add a little bit more. Okay, Churchill is, we're going to keep an eye on this one. So this one yesterday, I want to say we went into the 21s yesterday. Yesterday was a little bit of a painful opening for a lot. Yeah, it was 21.02 was the low there at the opening. The opening bell was intense yesterday. Didn't see that intensity today. Sometimes that could be a signal of, okay, was that maybe a double dip, right? It actually, for example, Tesla, it didn't come as low as it could have. I thought we could have come within 10% of those bottoms. We didn't come that low, but we came pretty low. We went to about 609, which is about somewhere around 70 points away from the previous bottom, which is somewhere like 12, 13%. Still pretty good. But even right now, Tesla is still an opportunity. Especially, my goodness, just the opportunity I feel like we're going to get in this charger expansion and these incentives for cars. Folks, nobody's paying attention to the fact that there's now a rumored cash for clunkers program coming. How could you not invest in EV? Now, almost certainly, they probably the better ones over Neo to take advantage of the cash for clunkers. Although the cash for clunkers would certainly, it's not like you're going to buy a Neo and get cash for clunkers money, but it just helps the entire EV industry. But yeah, I mean, certainly it would make sense for companies like even Lucid or Tesla or Fisker or some of these other EVs, as long as they can get vehicles out soon. It would make sense for this Cash for Clunkers program to really help electric vehicles and get some more electrification, especially depending on what kind of incentives the Biden administration puts out in terms of fuel economy. I mean, if they come out and say, like, we only want people to buy cars that have 60 miles plus a gallon, I mean, you're almost, I feel like, you're almost limiting yourself to either certainly hybrid, but you're almost getting to the threshold where it's like, okay, yeah, you need to be like EV only, which is crazy. So very excited about the infrastructure package in the sense of electric vehicles. Now, in the sense of the money printing and, inflation considerations, well, I mean, I think that's a whole other debate. Oh, good. Yeah, as usual, after I buy something, it dips a little bit more. So if you're probably used to that. So now you can get Neo for another 50 cents off. All right, let's take a peek here for a moment to CNBC while I pull up the terminal.
It's going to be terrific. Alphabet, I think, is going to have a great quarter because of advertising. Netflix is going to have a great quarter because of international sales. And the one that is the most questioned is Apple. Apple puts out as a story they may have a rugged watch. We need. Right. I'm not kidding. Service revenue is the way for Apple to go. But Apple, I was hoping that you could get Apple at 110. That's where I thought it was interesting.
Yeah, well, it's 120. Well, I mean,
right. Well, because they don't have the same multiple. As
you may still have the chance.
I wanted to have a Procter & Gamble multiple because I think it could happen. I wanted to ask you, just in terms of people being excited about IPOs, people being excited about new stocks. Remember, the most IPOs ever? No, actually, for 21 years. Don't forget, SoFi talking about how they're
Noto.
Right, Anthony Noto talking about how the retail investing, they're going to be able to allow their members to purchase shares of companies before they're publicly traded on the stock market. We have Robinhood IPOs. These guys are really trying to muscle in.
Yeah, Robinhood filing for its own IPO, and they want to give their customers pieces. That's what you're referring to. There's Anthony Noto, by the way. He's coming up in just a little bit on Squawk Alley.
He is.
But what do you think about
how convenient?
What do you think about what Robinhood wants to do for its users?
They have
give access to the action.
Okay, I think that this is why they're trying to get good board members. They're trying to get good
marketing.
The thing that they're trying to not be is just an app. I mean, lately the articles are saying Robinhood, the app. And that has no attraction to people. You have to be more than the app. So this makes them Robinhood, the broker. And that's what they need.
A little bit of everything.
Where is Vlad lately? Notice Vlad, the last time Vlad Tenev really made a splash was in that incredible Portnoy interview on Twitter.
I watched that. Yep.
where he showed, and Portnoy didn't wish him good luck. Kind of was shocked, though, he was there. And then Vlad went radio silent.
Well, because they filed confidentially for the IPO. That probably had something to do with it.
Well, he was radio silent right before that, too.
We'll get back to this in a second, Jim. Let me go to Kayla Tausche now. She is alongside U.S. Secretary of Transportation Pete Buttigieg. Kayla?
Hey, thank you so much, Scott. We are so thrilled to be joined here first on CNBC by the Secretary of Transportation, Pete Buttigieg, following a marathon hearing on...
This is actually important potentially for the infrastructure bill. Let's see. And then I do want to comment on the SoFi thing again.
Infrastructure package. President Biden will be laying out the what of the package next week, but how many jobs will it create and at what net cost to the American people?
Well, I think there's certainly no net cost. There will be a net gain. When you think about infrastructure, it's a classic.
Wow, net gain on $3.4 trillion. Let's hear it.
Return on that investment. That's one of many reasons why we think this is so important. This is a jobs vision as much as it is an infrastructure vision, a climate vision, and more. Obviously, the numbers are still being reviewed. The president's deciding what will go into what's going to be rolled out next week. But what I'll say is that expectations have been high. They've been high before. We're probably the third administration in a row to arrive with the American people expecting big things on infrastructure. I think this time we can actually get it done.
So you said yesterday it will be at least partially paid for. Senate Democrats are expecting around $3.5 trillion. What part of that will be paid for?
Well, that's obviously part of what we need to work with Congress to establish. I'm hearing a lot of appetite to make sure that there are sustainable funding streams. And again, at the same time, we know there's a great return on investment on infrastructure, so some level of deficit financing could make sense. We got to make sure that what we come up with is responsible, that it is reliable.
So he introed that by saying it's going to pay for itself. And then he's saying, hey, but some level of debt spending is okay. Okay.
High-income individual taxes to go up as part of this package, but there's some other revenue raisers under discussion that are squarely in your wheelhouse, and I want to go sort of rapid fire through them because you've commented on some of them before. First,
I'm shocked they don't have wind noise.
Fashioned to raise the gas tax. Do you still believe that? Could that go up?
Well, the gas tax has traditionally been part of how we fund the Highway Trust Fund, but we know that it can't be the answer forever because we're going to be using less and less gas. We're trying to electrify the vehicle fleet. So if there's a way to do it that doesn't increase the burden on the middle class, we can look at it. But if we do, we got to recognize that's still not going to be the long-term answer.
What about a mileage-based tax?
So I think that shows a lot of promise. If we believe in that so-called user pays principle, the idea that part of how we pay for roads is you pay based on how much you drive, the gas tax used to be the obvious way to do it. It's not anymore. So a so-called vehicle miles traveled tax or mileage tax, whatever you want to call it, could be a way to do it.
Build America bonds?
Definitely a lot of promise in terms of the way that we leverage that kind of financing. And, you know, there have been ideas around things like a national infrastructure bank, too. I don't mean to try to disrupt the spirit of the rapid fire, but you're hearing a lot of maybe here because all of these things need to be balanced and could be part of the mix.
And then a tax on carbon emissions. The Tax Foundation has suggested that at the rate that the Biden administration has set for the per ton cost of carbon, that it could raise about $2 trillion. Will you move in that direction?
So carbon pricing is one of the ways that a lot of economists and the business community believe we can have a market-driven approach that also deals with greenhouse gases. But it's too soon to assign a use for those dollars, even if it does happen, because you could do it in many different ways. There's even a version of it that would be revenue neutral. The point of carbon pricing is that there's less carbon. I wouldn't think of it just as a revenue mechanism.
Would you see that happening in the next year?
Again, that requires Congress, that requires the president and Congress to be in alignment. And these are exactly the conversations we're having right now with Democrats and Republicans on the Hill and within the administration.
You've said that you talk to Republicans almost every day.
Yeah.
Just this week, they've called this package a boondoggle and a ploy, the way that it's been reported the administration is structuring it. Meanwhile, progressives have suggested it's not big enough. It needs to be $10 trillion. So how do you thread that needle?
What?
Well, given that the package hasn't even been rolled out yet, it feels a bit like politics. At the end of the day, there's going to have to be a single answer that everybody will want to tug in one direction or another. But what we know is we've got to think big. We've got to have an investment that's going to support the next generation. It's got to be transformative. And I think that Republicans and Democrats alike see the need for that.
One Republican in particular, John Thune from South Dakota, said if the ploy is to lure Republicans to vote for the easy stuff and then do all the controversial stuff through reconciliation, I don't think our guys take the bait. How do you respond to that?
To me, this isn't bait. This is desperately needed American infrastructure improvements. And I'm a little puzzled by that comment because to me, we want to make sure that there's the strongest case made for any senator to vote for any provision of what we're doing. Now, as we saw with the rescue package, sometimes we can convince Americans, Republicans and Democrats alike, and that still doesn't mean we can convince everybody on Capitol Hill. But if there's one area where we can do it, I believe infrastructure is that area.
On reopening the economy, the travel industry has asked by May 1st that the administration give it a plan to restore international travel. Can you deliver on that?
We take our lead from the Centers for Disease Control, and the CDC is looking at conditions on the ground. We've got a race going on right now. It's a race between the vaccines and the variants. The more we win that race, the sooner we can have a safe return for travel. And look, I'm the Secretary of Transportation. I'm probably the most impatient person to get that safe return to travel underway, but it's got to be safe. And we're not going to get ahead of what the science is telling us, what the doctors are telling us, what medicine is telling us about what is the right thing to do to keep the American traveling public and workers safe.
The president has enacted some policies to try to make the government's own operations more green, notably trying to make
There's a lot of questions they're going through. It's not bad.
electric vehicles, 650,000 of them. Where does that effort stand?
Yeah, this is a really important thing. First of all, because the federal government ought to lead by example. The policy of this administration is to go green, so our vehicles ought to reflect that. Secondly, just think about the purchasing power of the federal government, just with the cars that we buy. So I know that entails a lot of different bodies, right? You got the Postal Service, which is a quasi-governmental entity. You got the Department of Defense, even here in the DOT. Of course, we don't own most of the transportation assets in the country, but we got a lot of cars and other vehicles that we use. We got to make sure we're leading the way too. So the president has challenged us with an executive order to be moving in the direction of more climate-friendly operations. We're running with that. We're going to make sure that we're setting very aggressive targets and hitting them.
Finally, when you think about just the size of government agencies, programs, conservative economists have drawn parallels to LBJ's Great Society and suggested that massive government spending paired with wartime programs would lead to out of control inflation. You're a student of history. Why do you believe that is or is not the case?
I believe it's not the case because it's been shown not to be the case in our time. For the last 40 years, the U.S. has pursued a policy of intentional disinvestment. And as a consequence, we've fallen behind the rest of the developed world. We need to decide whether we are content to permanently remain behind the rest of the developed world or whether we're ready to take the lead again. The very era that those economists are referring to are a time when U.S. leadership was unquestioned. Sadly, that's not the case today. You look at the investments China alone is making in, for example, their infrastructure. It is a multiple of what we here at home are doing, and that's going to have consequences for our competitiveness in the long term.
Secretary, hopefully we can continue this conversation as we get more details about the package. We appreciate you joining us on an extremely windy morning here in Washington. Secretary Pete Buttigieg, our thanks to you.
Thanks.
Scott, I'll send it back to you.
Yeah, wind,
That was actually pretty good. That was thorough. A lot of answers there. Possible mileage tax. Very committed to the electric vehicle revolution. Very committed to reopening and travel. Didn't hear cash for clunkers come up in that discussion there. I'm surprised. That would have been a very salient topic to talk about. So not sure who came up with the questions, but I would like, if you hear this, to talk about cash for clunkers a little bit, okay? And what kind of fuel efficiency standards that we're going to be looking at. Those are going to be the two big things for me. What's that cash for clunkers program going to look like? Are they going to partner with used car dealerships to make that happen? How are they going to do it? Are they going to do it like they did last time? Are they going to fix the problems from last time? Are we going to see very high fuel efficiency standards like 60 miles plus? Or are we going to see some weaker standards? I don't know. We'll see. We shall see. Interested to keep an eye on that, though. I think that's a game changer. Also, a big line that you mentioned there is China is investing a multiple of what we are investing. This consistently seems to be a fight over China. Just what can we do to be better than or like China is consistently what I'm hearing in the Biden admin. How can we fight China. All right. So let's see here. Down and out in Magic Kingdom when Pooh got fired. Yeah, okay. Winnie the Pooh article is now a top story over here. Must be about Disney. Let's take a quick peek at it here. Sad news spread quickly through the happiest place on earth. Princess Jasmine was laid off. Winnie the Pooh too, even Mickey Mouse. Man. Dear cast members, the forum begins. Now, months later, orphans of Magic Kingdom are gathered here, looking for a way to make ends meet. Huh. Jeez. Not something I think we need to continue to read here heavily, but sad. Oh, it's just sad. People really identify with it, with their positions. Yeah, at Disney, I know that, and job loss sucks. All right, so what do we got here? Stocks advanced. So stocks rose, oil rebounded, and long-dated treasury yields climbed on optimism over vaccine rollout. Oh, did they? Well, let's see here. 5 and the 10. Let's grab them here. 5-year. Let's see. 5-year. 10-year. Okay. Line chart. Okay, let's go to the 1 month here. Let's look at the line chart. Let's see what's going on with the bonds. Actually, let's go to the 3-day. It's going to be a little easier to picture it here. I'll hide myself for a second. Okay, so we do have a spike here over the last 3 days. See, we've been pretty stable, and all of a sudden we do have a bit of a spike. This is the 10-year here at 1.66 and 0.85. 0.85 is one of those potential threshold levels. Yeah. Okay. A little bit of a spike here. See what the this is suggesting here. S&P 500 turned positive for the week, led by gains for financial companies Friday. Tech stocks underperformed, weighing on the NASDAQ 100. Caribbean and Carnival both rose for a second day on reopening bets. Dollar edged lower, but remained on course for its best week in 3. Remember, when we see yields go up in bonds, we also tend to often see the dollar go up. All right, risk appetite came back across the world, capping a volatile. Well, I don't know about risk appetite coming back. I mean, we still got some pain over in the tech and the high PE sector. Tempting bulls. Dollar index near golden cross. Okay, the tone of the market has somehow altered from angst to optimism. Really? It's remarkable now how little that takes to shift the mood. Yeah, I mean, this is what happened last time too. Is about 2 weeks ago? I'd say 2 weeks ago, somewhere around March. Well, 2 weeks ago, no, more like 3 weeks ago, somewhere around March 5th, March 8th. Everybody's like, "Oh my gosh, this is the end of the world! Sell everything!" Right in the middle of sort of the crash last time, and it was like literally a day after that everything started going up again, and the turnaround is so fast. And then all of a sudden, it was like on Friday, Bloomberg's running stories about how bad everything is because yields are going up. And then on Monday, they're like, "Oh, okay, now we are, it's Monday," and all of a sudden, or it was Tuesday actually when it started going up again. It's Tuesday, and all of a sudden, we don't think yields are that important anymore. So the story was relationship between stocks and yields falters, and all of a sudden stocks were going up and yields weren't really doing anything. So it's hilarious how emotional the market is. You got to try to remove yourself from the emotion and look for the deals. All right, what does this say here? Fed's Harker sees above target inflation. Okay, let's see what they're saying here. All right, let's see here. All right, so Fed's Harker sees above target inflation, optimism on bond market. U.S. inflation is set to be contained just above the Federal Reserve's 2% target, and rising market interest rates are a sign of optimism, says Patrick Harker, who is the president of the Bank of Philadelphia. Our forecast is for inflation to creep up to 2%. Our goal is to have it hit above 2% this year. Our forecast is 2.1, but we don't want to see it run out of control. It would be, let's listen to this. 9 minutes? I don't know. Let's hop around a little bit. I will say, I don't know if they're going to make it. I'm skeptical. Let's see what he says.
Came out this month was the highest for prices paid since 1980. Do you anticipate a really, really rapid rise in prices? Is that what people in your district are telling you?
No, that's not what we're hearing across the board. We are seeing in certain pockets, like manufacturing, their supply, they're seeing price pressures. But what they're not doing is
I don't. Maybe I'm just gonna let that load for a couple minutes here because that's pretty laggy. So we're gonna just go ahead and pause this for a second. But yeah, I mean, maybe they bottom lined it well enough. But anyway, I'll pause this and maybe we'll come back to that. All right, let's go back to the sticks here for a moment. So Neo still right around that 35.80 to 36 figure. I paid, what was it, 36? Yeah, 36.08. Anyway, Microvision, Express, OGI, Churchill, Upstart. All red. Upstart. This is like one of the few red days we've seen for this stock. Let's go out to the day here. Yeah, so a couple red over here. But really just this incredible run at Upstart. Absolutely insane. All right, let's flip here. Let's see here. Naked's running and GameStop's back. What crazy. So GameStop was like up 11% at the open, then went to up like 1%. And now it's back to up 13%. Well, I mean, what a stock. What a volatile stock. I mean, this is like when you look up volatility in the dictionary, you get GameStop. Let's look at the minute chart here. Wow. It's just this swing of a roller coaster ride it's on. Nordic American Tankers is up. I wonder if this is because of that oil stress in the Suez. Jeez. Be interesting to see how they move that massive ship. I guess the ship has like this really, really large front bow, and it's basically stuck in the dirt. It's crazy. Restoration Hardware, Unity. Unity's back up. Finally, Unity's back up. I'm not in on Unity, but I'll say this thing's just been straight down for a while. Let me see. IPO was, I think, what, $70? Yeah, I think so. So IPO on this one was closed at 71. It's at 95 right now. But, I mean, all of these gains have just been evaporated from the stock. Ubiquity. Ubiquity is just another one that just keeps running and running and running. It hasn't really had a very large correction to the downside. Let's look for a moment at the Ubiquity stats. Why don't we do that? Let's go to UI. It's such a great ticker symbol for that. All right, let's see here. Kathy's been getting on in Unity, says someone. Yeah, I try not to just. Well, and I don't. I don't really care what other people are investing in. Generally, I'm looking for my faves. My faves. Okay, so what do we got over here? But that's not it's certainly not a bearish sign. Okay, so what do we got? Ubiquity. 2020, we had 33% growth, expecting 30 or 47% growth going in through at least the first half here of 2021. It's an interesting way that they do their calendar here, ending mid-year. Makes it a little more confusing. So really, this is your COVID year here. Expecting bullishness going into the rest of the 6-month period here left, or 3 months ahead of us. And then back to slower growth next year after COVID. Kind of makes sense. And let's see, can we get projections out more? No, we can't. But earnings per share of around $10 projected for June. That puts this thing around, let's see, 10. I mean, what are we at now? 350? Yeah, let's see, 350 divided by 10, 35. Wow, that's not bad. Yeah, forward PE. It's a pretty low forward PE for a company that I almost somewhat feel is a little undiscovered. Let's look at their numbers here. Let's go to the balance sheet for a moment. Okay, forward. Okay, so we've got 143 mil in cash. We've got, let's see, where are our debts? Here we go. Got a bunch of current liabilities, 264. Long-term debt, 647 in long-term debt. They got a lot more debt than I thought they might have. Cash, they've got 143. They've got inventories, 285. Total current assets, 585. Yeah, but a lot of that's inventories. When they get a chunk of debt, it wouldn't be shocking. I mean, why don't they should just raise some capital with how their stock has moved. The total liability is $1 billion. Little high on the liabilities. And then again, it is like they supply like routers and Wi-Fi access points, kind of like Cisco grade systems. Do I think the Fed will implement yield curve control? I don't think so. I think the Fed's very happy right now with the inflation that we're seeing. So yeah, I don't think so. Okay, let's. I gotta keep an eye on Ubiquity. We'll circle back to Ubiquity here, but let's listen into this for one moment.
Mid-month Zoom up to 93.0, 77.5 on expectations, also runs up to 79.7. On the inflation front, the 1 year remains the same at 3.1, but we did see some movement on the 5 to 10 year inflation outlook and move from 2.7 to 2.8. There's been plenty of 2.7s. Now that it's 2.8, well, we were 2.8 in July of 2015. To find a higher reading than 2.8, you have to go back all the way to August of 2014 for a 2.9. Morgan, back to you.
All right, there's some context there.
So
Rick
good news on
thanks.
consumer
Have a
sentiment.
great weekend. We're just going to get a check on the markets to kick off this hour. Major averages are all in the green. The Russell 2000 is actually outperforming, and it's up 0.9%. That's after getting hit pretty hard earlier in the week. Still poised to finish, though, for the week down about 3.7%. The S&P and the Dow are both fractionally higher, each up about 0.5% right now, also poised to end the week in the green. In terms of what's performing the best sector-wise, it's energy, which is up 1.5% in large part because of that ongoing bottleneck in the Suez Canal that we're going to get to in a little more depth in just a moment. But also financials are up 1% as well after the Federal Reserve did say that those temporary limits on dividend payments and share buybacks will end for most of the banks after June 30th. And Scott, that's certainly a notable development in a week that's already seen so much Fed speak, including multiple appearances from the Fed chair, Powell, as we continue to have this debate about economic growth picking up faster than expected, but monetary policy sort of staying pat here, easy monetary policy staying in place. And of course, this bigger, broader, longer term debate we've all been having about inflation.
Yeah, rates, obviously the story pretty much every day. And the 10-year Morgan got as high as 170 or so this week. It's ticked a little bit lower, and that's why you are seeing some of the green, at least on the screen where you are, including the NASDAQ, which was in negative territory throughout most of the pre-market and made its turn as yields started to tick a little bit off of the highs. They're still at 166, but maybe
just the relationship between these yields and stocks. I just wait for it. I mean, ask yourself this: how long have we been concerned about the yields? Like, when was the last time? Does anybody remember the last time we were really concerned about what bond yields were? And I can tell you it was back when we were talking about the inversion of the yield curve. It was like, what was it? March of 2019. It's like, oh my gosh, the 10-year has intersected with the 2 and what's happening? So much of a freak out going on. That was the last time the market was really freaking out over yields. And, since then, we just haven't really been so concerned with yields. And yet all of a sudden it's like, oh my gosh, here we are, yields going up. Oh no. Here we are freaking out over little spikes, which in the realm of historical perspectives here is like nothing. I mean, it's if we go out to, let's say, go to the 5 here on right. These guys here, go to the 5 years out on the 5 year and the 10 year. I mean, look, it's not that big of a deal. Like this relationship will not last. This is almost like just an excuse to trade off of. I feel like for the suits basically. It's the suits are looking for a reason to convince their clients to go into certain sectors compared to others. I don't know. I really stand with Kathy Wood on that one. Yeah. Anyway, let's get back to the sticks and see how things are performing here. So Unity up 5.8% now. Ubiquity up 4.8%. We've got Zillow, ChargePoint, AMC, CLII. These guys, some of the Chargers are actually up today. I think there's a potential play in the Chargers. Again, I made the little Chargers pie take a look at that. metkevin.com/chargers. I actually put what's it called, Tesla in there too, mostly because I really think the whole like Tesla opening things up to everyone is kind of brilliant. If you didn't see my Tesla bombshells video yet, watch that from yesterday. The 3 Tesla bombshells. I might do another one today. Just keep getting news on Tesla. So okay, what else is going on here? So Neo's kind of stable around that 36, 35 and a half-ish range. Roblox down 1% here. Not actually terribly much happening in the market today, other than the fact that that course coupon code does expire today, which you can get 38% off on today, and then the price goes up. So check that out, link down below. And of course, make sure to get your bundles if you want to get those bundles. But yeah, I mean, honestly, I mean, this is relatively flat here. I mean, Tesla down 0.5% here. I would be more interested in what could potentially happen if we look at coming in on Monday. Do we think that once this March session is over, well, March won't be over until Thursday, right? But do we think that this quarterly rebalancing coming to an end is going to be very bullish for our market next week? Generally, I'm very bullish on the market unless it's going up consistently. Then I get a little bit more nervous. I'm like, okay, time to pay off margin. But right now here, I've been a little bit more spendy this week. Not as crazy spendy as I was in the crash that we had in early March. That's where I really went ham buying stuff. But that was because I freed up money from what's it called? from having sold some stocks around March 9th and March 16th. So lately, it's just it's been a lot of red turning redder, but did get some really good deals early March. Haven't seen a revisit to some of those prices at some stocks. Trying to let's see what else is relatively close to some of these early March lows that we've had. I'm gonna keep my eye here on Ubiquity. Really like this one. I'm gonna keep my eye. See, Wayfair's too expensive. Wayfair, Etsy, these guys haven't really sold down heavily here. Not going to invest in WeWork. Apparently, WeWork is now in talks to go public via SPAC. I don't know about that. We'll see what happens. Anybody going to buy WeWork? That's it's a little bit of a surprise to me. Okay. Oh, there we go. Sorry, I'm trying to fix this thing here really quick. There we go. There we go. Okay, perfect. That's one that I'm probably not going to touch. Robinhood, on the other hand, I think that one's going to be interesting. I wonder how that one's going to get treated by the market. Mostly, I think it's probably going to be one of the most explosive IPOs that we have. I know there's going to be a lot of hate for Robinhood, but I think that Robinhood IPO is really going to show that potential strength of the retail, the Wall Street Bets crowd, and even the YouTube crowd, because I wouldn't be shocked to see it do much better than what I think we expect. Mostly because because we're on YouTube, I think we overestimate a little bit how much negativity there is for Robinhood. And I think the broader market's going to be pretty excited about it. And I also think when it comes to like GameStop, I think a lot of those trading swings that we're seeing, I think a lot of the suits have gotten in on the GameStop play, and they're just taking advantage of these crazy swings. And you think about it, there are companies that try to take advantage of volatile stocks just on like pennies worth of swings. At GameStop, it seems like you have $20 to $50 worth of swings like every day. It's pretty incredible. So anywho, okay, yeah, I mean, look at it. It's up 15% today. So this is just incredible. Hey, look, it's up literally, what is this? Is it 50%? Sorry, 50 points? No, what is it today? Today, let's see. We opened up is the thing. What did we close for yesterday? Yesterday we closed for, let's see, Weeble's lagging a little bit. Okay, so we have about 40 points. Weeble's lagging a little bit, which, by the way, if you want lag, make sure to go to metkevin.com/Weeble. You could too sign up for Weeble and enjoy any kind of like freezing or lag on this platform here. So let's see what they're saying here for a sec regarding oil, and let's try Fox as well.
But the action today suggests that traders think that maybe this will be a little bit of a longer-term impact than initially thought. There are now more than 200 vessels waiting to cross the Suez Canal on either side. So really just a huge traffic jam.
Yeah, and Pips, I'm sure people are watching it saying, that's a lot of containers on that ship. I wonder what's inside all of those. Do we know? Do you have any idea and what the impact could be on consumers?
It's basically everything you can think of. So
Neo cars,
clothing, food, exercise equipment, auto parts,
Pelotons.
wheat, just all of these products pass through the Suez Canal. And it really is just a major waterway. And the issue that experts are pointing to is that there's no visibility into companies' supply chains. So if you have a good that's held up on one of these ships, you know that now, but then we don't know.
That's why they need Palantir, folks.
As this backlog increases, and as ships decide if they're going to reroute, then their ports are going to have congestion. There won't be crews available. They won't be able to unload. So this really is going to have repercussions around the world. And this is going to be a story we're going to continue to talk about in the coming weeks, and maybe even.
It's gonna create some dip buying. That's what it's gonna do. Oh yeah, that'll be awesome. So all right, yeah, let's see here. All right, so yeah, all right, let's jump on over into the sticks here. Let's see, what's going on here? Let's see here. GameStop, Naked. These guys are the ones running big right now. We've got Neo. There we go. Neo's back over 36. Churchill's sitting at, sorry, there it is. Churchill's sitting at about 2.8% on the den. We're really playing within our box here, which we had drawn during the last crash. Yeah, really trying to play within this region here. This is our low bound for Churchill. And gosh, I mean that right there, look at that crazy drop yesterday morning. That's amazing. Yeah, trying to play within our lower box here. We'll see if we get back to our higher boxes between 28 and 30. All right, let's see here. I imagine that'll happen once we get our rotation back to vehicles. Vehicles are just not loved right now. But it's all of them, right? So you can't feel bad because they're all down. Tesla's down almost a full percent here again. Getting to that point where I'm starting to think about adding to Tesla again. I add too much to Tesla. It's a problem. It's a problem. Etsy's up back over 200 here. Steelcase is up. Voyager Digital's up 12%. This thing's so volatile, this one. I get a chunk of money in this one. But yeah, lots of volatility on this one. But the CEO is great. I mean, huge shout out to Voyager. Great CEO. Great platform. You know, I'd say they're, in my opinion, they're par with BlockFi from the differences that I've seen. They both do affiliates too, or the free bonuses if you are doing crypto and wanting interest. BlockFi did just reduce their interest rates, which I'm planning a video for that. But yeah, what is BlockFi? BlockFi is get $250 by going to metkevin.com/BF. That's up to $250. And then Voyager is get $25 by going to metkevin.com/Voyager. Anywho, so EXBI coming back, really trying to rubber band to about that $50 range here. So do we have news on Unity or Ubiquity that's pushing these guys? Let's pull Bloomberg Terminal here really quick and just see what kind of news we've got on these. So news for UI. Let's see if there's any particular news here. Okay. Yeah, I don't think here's a comment about Volkswagen outpacing Tesla in Europe. You know what's going to turn that on its head? The Berlin Gigafactory. Why? Okay, this is it's just my belief. I could be wrong here, but I believe European culture does not want to buy Chinese vehicles. Certainly not Chinese electric vehicles. I don't know why. That is just a belief that I have. I could be very wrong on that. Once you have a German manufactured Tesla, it would not shock me to see sales explode. It's a different culture. I'm just making an observation. I'm not saying it's right or wrong, so don't sue me. All right. Somebody says Ubiquity appears to be significantly overvalued. Really? Wait, really? Why? How? At 30 times forward PE? What? What are you talking about? I, by the way, am a big fan of reading things that disagree with me. Okay, I don't care. How do we still have pop-ups? How is that still a thing? Guru Focus Value Calculation. Okay, you're using a value calculation for a tech stock? Okay. Based on historic multiples, bro. Okay. That's really how you're gonna do this? Okay, this is like I feel like this is an algorithmic written article. Keep in mind, these articles exist. They basically just use bots, and they're like, hey, what was the historical PE? What was, here, cash to debt ratio? And then they literally just have AI write these articles and spit them out. It's kind of brilliant, actually, if you think about it from like a news publication point of view. And they talk they read like robots. Over the past 12 months, the company had a revenue of $1.6 billion. See, it's a robot. It's a robot. Oh my gosh. Had a revenue of $1.6 billion. It's a freaking robot. I did not think that I would actually find potential evidence of it being a robot that quickly. Oh my gosh. That's too funny. Okay, so the robot says it's overvalued. Maybe it's time to buy. Oh my gosh. Fugazi, not Fugazi. Really? Is it Fugazi? Fugazi? Now I gotta check. Dictionary. I just want to hear it pronounced. I'm not doubting you. I don't even know how to spell it. Fugazi. I'm sure. No, not Gugazi. I'm sure it'll come up if I misspell it here. Okay, it doesn't. Okay, so I don't know how to spell it. I just what do I know? Let's try to Google it. I don't know why am I doing this? Oh, here we go. Fuga. Okay, here we go. Did I misspell? Oh, F-U. Oh, okay. It doesn't even come up. It didn't come up in dictionary.com. All right, whatever. Okay, so what else? Let's see what else here. So I'm surprised by that particular one. Price target raise. You know let's take a look at this. Oh, thank you for the spelling. So let's see here. These guys raised their price target on Ubiquity. Let's just do a quick skim of why. Okay, research note summary. Introduce new product line that incorporates a recurring revenue model with traditional hardware business. Ubiquity has launched a line of phone end units and phone systems with a subscription plan. Wow, that sounds a little dated. Okay. Let's see. A new product comes at a time when strains of a lean supply chain are beginning to surface again. Yeah, no kidding. Look at Neo. Okay, what else do we have here? Okay, these are just disclosures. That's it? That's all they've talked about? Is some phone line with a subscription model? Okay. What's another one here? Oh, Barclays. Let's look at Barclays, and then we'll move on. We'll look at what's going on with Unity. But let's look at what Barclays has to say about our boys over at Ubiquity. Okay. And girls. Yeah. More using the more never mind. Strong quarter starting to plateau. Great. And I don't have a big position in them. A very small position in them. But I mean, I've been interested in adding to it, so I want to do some more research on that. Delivered a solid quarter with double-digit year-on-year, but is beginning to slow. I wouldn't be surprised if that is potentially because of COVID. That's unfortunate. I mean, they've done so well, but that could be an issue. Sequential deterioration, concerns over blah, 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 supply chains. All right. I'll do some more deep diving. There's no clear answer here on Ubiquity. So I'll do some more deep diving on Ubiquity. What about Unity? Let's look at Unity here because a lot of folks like Unity. But just because a lot of folks like Unity doesn't mean it's a good thing to invest in. But I want to look at Unity here. Let's look at their fundies. So projected to be at 1.2 billion in 2022, but still losing money in 2022. Okay, let's go forward. Let's go to 2023. Okay, 2023, we actually get, oh yeah, I mean, we barely get some growth. So you're talking about a massive earnings multiple here. I mean, you're over 500, but you can't, I mean, it's difficult to do here. The gross margin is insane. What are they spending money on to have such a bad net? So let's see what they're spending it on. Does it say operating losses? No, they don't break it down. Be interesting to see what Unity is spending all their money on. Is it advertising or is it like R&D? That's a big question to me for Unity. Unity investor relations. Pull that really quick. Here, I'll pull that up really quick. And in the meantime, let's see what's being talked about over here. Oh, I get please wait. Okay, I changed channels and I get please wait. What is this crap? Okay, fine. Let's do a quick update on the stakes, and I'll come back to the Unity investor relations page. Oh, there we go. It's coming. A quick update on the stakes. Just see if anything. Oh, now Ubiquity's up 7%. So I come on. You got to give me a chance to buy it. No, I'm not gonna buy it right now. No. Darn it. I really like the company. Neo. Oh, Churchill's all of a sudden free falling here. Oh, big red candlesticks. Oh, killer. Pain. Where are buttons? We need buttons. Where is it? Here you go. Oh no. That feels too low. We need more. Here we go. There we go. This is what's happening. Oh. That's not good. That's not good. Not sure why. Not sure what's happening there. Some news come out on that one? Let's see. Okay. CCIV. In the meantime, Fox News is making fun of Biden for using cheat sheets. Cheat sheets.
Yes, we have to say it again. That giant cargo ship is still stuck in the Suez Canal.
And now they're talking about the cargo ship. Okay. What's going on with Lucid? Lucid. This was just from yesterday. No, I don't see anything here. 8,000 reservations for their $170,000 car. EVs are changing the car business in more ways than you think. All right. EVs can be such a great investment long run for the next like 35 years, in my opinion. Again, we're very, very, very short term on our outlook sometimes. Okay, let's go back here for a moment. Let's go back to the sticks here. Yeah, so really no reason. Okay, yeah, now we're bouncing off that. A lot of volatility all of a sudden here. And Neo got a little bit of a taste of that too. Another red candlestick here. Another little buying opportunity. Tesla also just went deeper red. We're trending down on EV today. So maybe it's best to wait a little bit on some additional buys because we are trending down. All of them, really. Yeah, Tesla was virtually flat, and now it's heading down more. Is Fisker seeing this as well? Yeah, Fisker seeing a nice downtrend as well. AMD, pretty flat here on AMD. GameStop, nice run. Stabilizing at this 15% level. Ubiquity is up 7%. Nice run in the day here. Not a lot of volume on the stock. Not a lot of volume at all. Dave & Buster's up almost 7%. Upstart. Here's Upstart again. It was down 2% this morning. And all of a sudden, boom! Just explodes. What's going on at Baidu? Oh, 8%. All of a sudden, a big sell-off here on Baidu. Why? What's going on? Drop on report of large block. Oh. Being offered by Goldman? What, is Goldman selling out? Through Goldman, according to a research report. We could probably see that on a terminal. Let's see. Baidu. BIDU. Let's go, Baidu. All right. Let's see it. See what's happening to Baidu. All aboard! Okay. China tech stocks rise after drop fueled by delisting angst. This is that same Seeking Alpha article here. Here we go. This is from Bloomberg. Baidu, Tencent Music, Block said offered via. Okay, yeah, that's basically the headline. So we don't really know how much. Oh, here we go. 10 million shares offered by Goldman Sachs. Oh, that's interesting. So I wonder if this is like them selling shares they have, or if they're. I don't think Baidu is issuing new, so I think it's just Goldman's just selling a bunch. All right. Okay, you got a big seller in the market now. I don't know if that's big of a deal, but I don't know much about Baidu. And by not much, I basically mean nothing. Okay, so no particular news here. Let's go to top news for a moment. Top news. All aboard. Yes, we've talked about NEO and we have bought the tip. New Jersey to expand vaccine eligibility. This is a flashing red update? Okay. Wall Street bonuses rose 10% last year. Why not? It's always the rich getting richer. Consumer sentiment in the U.S. continued climbing in late March. We saw that. Yep. Inflation break-evens hit new highs after PCE miss. PCE came in? Wait a sec. So early data indicates that this round of stimulus money is so far going towards real-world purchases, not into stocks. That's good for retailers and malls. Credit card data. Oh, this is interesting. Credit card data from Bank of America for the week ending March 20th showed total spending rose not only 45% from the pandemic slam period a year ago, but also climbed 23% from 2 years ago, driven by government stimulus payments. Card spending for stimulus recipients jumped 40% from February's average, with people buying furniture, electronics, and clothing. Wow, that's good. Good. So we're seeing that money go into, I mean, that's what it's designed for. And we see that money going into, going back into retail, which is an area that has been very, very painful. So that's good. That's good to see. All right. What else here? Okay. Okay. Somebody says they don't understand why Tesla will outpace Volkswagen in Germany once they produce the German one. Because Tesla is sexier and it's cool. And if it's sexy, cool, and German, they're going to want it. Just wait and see. That's my take. Okay. And maybe I'm overly biased because I see the transition in the Germans when I talk to the Germans because I have family in Germany. But maybe I'm too biased, Maybe I'm letting myself be too influenced. But that's what I would be looking for in data. Oh, drop a pen. Gotta get it here. There we go. Yeah. So, all right, let's see here. Shoppers are heading back into the mall in person too, with foot traffic jumping. This morning, Victoria's Secret owner L Brands raised its earnings outlook due to an unusual shopping surge. Wow. Oh, wow. In part by the latest round of stimulus checks. And the CEO of mall operator, a mall operator, said the company is strongly encouraged by higher sales and traffic trends, reflecting pent-up consumer demand along with more vaccination and rising consumer confidence. Nice. Very nice. That should be good for like the Simon Property Groups and the others here. Let's take a peek. Yeah, the recovery is going to be in full boom mode here. Simon Property Group's up 2%. Let's see if we get L Brands. L Brands. I just saw it here. L Brands. There we go. L Brands. Oh, yeah. 8% there on that revision here. Woo! Woo! Very nice. Very nice. Very nice. I like. Oh, gosh. Upstart up 10% again. There's our new trade. Jeez. That's a push. Just this is what keeps going. It's the gift that keeps on giving. Neo at about 36. Shift Technology down 2%. Kind of just been fluctuating around that 8.5 level for a while. Tesla recovering. So Tesla hit about 630 and is now recovering. We've got, what else here? Rocket, Zoom. Okay, everything, a lot in the middle here. That's not super exciting. All right, let's see. I want to see what else is going on here in that terminal because this has been interesting. So what's not gaining thanks to the stimulus? Retail stock trading, at least according to JP Morgan, over the past week, despite being the beginning of the $1,400 stimulus check disbursement, we have yet to observe a meaningful pickup in retail trades as a percentage of orders. It's not a surprise, especially since the market has been somewhat red. I feel like a lot of folks do not actually like buying the dips. Like it's easy to say, rocket to the moon. It's easy to say buy the dip because you got to buy the dip coffee mug. It's hard to do. It's hard to buy the stuff that's red. So you see a lot of that hesitancy I believe, to buy when stocks are red. And so instead, buying stuff. Makes sense. Inflation break-evens climb. Let's see here. 10-year and Treasury break-even inflation both hit new highs after the PCE print. This may be the case of traders seeing why they want in the data, because there really wasn't much there. On the other hand, it just represents a return to optimism. Okay, let's see here. So let's see. Okay, the all-in. I want to see the PCS report or PCE report. Here we go. Core PC inflation missed. Okay, this story has been updated. Click for update. Okay, fine. All right, here we go. U.S. household spending declined in February, and incomes fell as the initial boost from the stimulus checks as the start of the year faded. That's the $600. Okay. Personal income, stimulus checks distributed. Personal incomes and spending eased after surging in a month prior. Here we go. The index of consumer prices that the Federal Reserve officially uses, that's the PCE is the, what is it? PCE, personal consumption expenditures. There we go. Uses for its target rose 1.6 in February from a year earlier, the biggest gain in a year as energy costs increased. The core price index, which includes more volatile food and energy costs, advanced 1.4%, less than January's 1.5% gains. Wow. Okay, so in terms of what the Fed looks at for inflation, we had a miss on inflation expectations. We were expecting to go from, what was the expectation? Actually, it doesn't tell us. We would just have a lower gain than what we had in January and February. Whew, exciting to see. Why does it take so long to get February's data? It's March 26th. Feels late. It's the CPI. The next CPI one comes out. Let's see. I'm going to pull this up here. Next CPI. I've got that saved. Caddies. Here we go. Next CPI is April 13th. Gosh, why does PCE take like another 2 weeks to come out? That's interesting. All right. I still would not be surprised to see the same kind of crap happen in March. That even with the stimulus checks, we're going to be like, what? No inflation? Welcome, Henry. Appreciate you being here. PCE inflation will provide insight to near-term bond trend. Yeah. Small caps have been caught in a market tug of war until now. Yeah, things are doing well right now. Small. Okay, let's go to top news again. So that's interesting. Another miss on inflation readings here. Consumer sentiment continued climbing in late March. All right. Victoria's Secret owner boosts outlook on unusual demand. I don't know. Lots of people coming into our store with $1,400 stimmy checks. That's too funny. All right. Wow. Thank you for this fun fact, Charles. The $10 and that fugazi is an acronym from the Vietnam era. It means effed up, got ambushed, zipped in, meaning your patrol was ambushed and then died. It was also the name of a DC band that started post-punk. Wow. Thank you. All right. Finally got it. Somebody says they finally got into Neo today. Hey, yeah, great place to start. Okay. I gotta pick a swing trade again. I really haven't picked a swing trade in a while. Everything I've just been buying has been some of my longs on like EV and energy. I haven't picked a swing trade in a little bit. Let's see. Gosh, NAT. Just on the Suez Canal, really? 12%. GameStop 12% again. Upstart killing it. Ubiquity now up 8%. Unity up 5%. These are doing really well. ChargePoint up. Wayfair. MP Materials. Nice. Canoe. Etsy. Into the airlines. I mean, really, the recovery stocks have just been doing so well for so long. That rotation will flip one of these days. Not that I want recovery stocks not to do well. Don't get me wrong. But tech will be back. Okay, let's listen to this for a moment.
Mississippi today, I'm sure you're familiar with it. You only have 14% fully vaccinated?
Well, Mississippi Today is certainly a very liberal rag. That's a website. It's not even a real news source.
Well,
but that notwithstanding, we've done 1,114,000 shots in arms. We have gotten approximately 750,000 Mississippians have gotten their first shot. Approximately 450,000 Mississippians are fully vaccinated. Our total number of cases are plummeting. Our total hospitalizations have gone from 1,444 down to about 250. Our total number of ICU patients has gone from 370 at our peak.
Yeah, all right. I'm kind of bragging about stats here. It's a little boring. Okay, I'm glad you're doing well in Mississippi. He's counting. Yeah.
Leases at around $1,000 a month.
What's this?
Exactly. The lease is the perfect alternative to the subscription model, I think.
So they pioneered
By the
it.
way, I don't drive the Porsche 911 any longer because I'm too old, as you well know, Susan. I'm moving on. I'm going to change the subject here. Boat sales, we believe, are taking off during the pandemic. Not just the rich who are buying. Well, Ashley, he's got another tough assignment. This guy, I tell you, he's joining us from a boat in the next hour. Yeah, it's probably going to be nice.
Boat sales speeding up. Believe that too. Okay. Anything else going on? Anything else going on in the market? Consumer sentiment in the U.S. has continued climbing. We saw this. New Jersey expanding. Okay, we saw that. Biden names wife of pivotal Democratic senator. Okay, fine. Accelerated ETFs will do. Let's see. What's accelerated ETFs? Let's see here. A firm behind a growing set of exchange-traded funds that cushion losses is offering a new suite of tools for bulls to bet on another stock surge. 4 accelerated ETFs will launch on April 1st, which will double the gains of the benchmark they track to a predetermined limit, but only provide a single exposure to the benchmark on the way down. Okay. Unlike traditional leveraged ETFs, they are designed as short-term trading vehicles. The innovator funds may be more suited for long-term. Unlike traditional ETFs, unlike traditional leveraged ETFs that are designed as short-term trading vehicles, these funds may be more suited for long-term investments since they're magnified on the upside only and rebalance annually or quarterly. That's interesting. Leverage on the up, but not on the down. That's interesting. So how they're hedging that. Interesting. These funds join the firm's other defined outcome ETFs, which use options to mimic structured products. Okay, so that's how they're playing it. With valuations elevated, Wall Street strategists are nearing unanimously forecasting a low to moderate growth environment for domestic large cap equities in the mid to long term. Okay. The new funds seek to provide the potential to enhance returns in such challenging environments. Yeah, I don't know. There's always risk with those the fancy choices here. Sounds to me like they're setting the stage for, hey, if large cap moves moderately, we'll double down on a moderate move. If it moves a lot, they might lag. I don't know. We'll see. Especially if they're target based, and if they go down, they'll try to protect on that. Well, we'll see. Your instant coffee may soon be at risk from the Suez blockage. Ah, yes, coffee. Also containers of Robusta coffee. Nescafe. It's so interesting to think of the variety that's on those ships. Do you imagine just like say somebody calling you up and going, hey, you now own this ship and anything on it is yours? It'd be such a fun like scavenger hunt going through it. Like, oh, really? Everything on this is mine? Okay. Okay, cool. So, what about Palantir? How's our PT Palantir? See, I want to buy something. I'm gonna buy something. I'm gonna spend a lot of money buying something today. That's what I decided. I decided I need some excitement. So I'm gonna make a big bet. I'm just gonna pick something. And we're gonna put like, how much should we put in? Like 500K? That's pretty stupid, Kevin. Why would I do that? I got to pay off margin. I don't want to, though. That's boring. I don't want to be boring. I want to be fun. Okay, so that's what we're gonna do. I gotta pick something today. It's gonna happen today. Maybe what we'll do, you know what we'll do? Okay, here we go, folks. We're going to make a deal. You come to the private live stream today. Oh, man, now I'm making myself nervous. I'm making a commitment here. Well, I got to do it. Come to the live stream today. Kevin's going to put 500K in something. And if you want to know what it is, use that coupon code expiring tonight. You could use it now. It's code HODL. You get to join me in the private live streams when I do crazy things. But we also go deep. High conviction. We do good fundamental research. Do good analysis on real estate. We get a good opportunity to do a lot of Q&A. We get to chat together. So look forward to seeing you there. But it'll be fun. Well, what do you? Okay, I'll take some suggestions from you all. Give me suggestions. What should we put 500K into today? Give some suggestions here. I'm seeing that. I'm going to write these things down. Okay, interesting. I'm not going to read out what I'm writing down. Okay. Interesting ideas. Okay. I don't know. 500K. Okay, that's got to be like, that's a 5% move in the portfolio, right? It's got to be good. It's got to be good. Geez, I just cut out some work for me over a little bit here. Okay. Interesting. Yeah, these are some interesting suggestions. Oh my gosh. Okay. All right. Okay. Thank you. We'll see. Oh my gosh. Some funny these are some funny suggestions. Good. Okay. So oh my gosh. Gives me a little bit it's not going to be Tesla. It will not be Tesla. I am way too concentrated on Tesla. So yeah, read my Alpine super chat. What? Oh, okay. Spencer Gore interview. Yeah. Thank you. I wrote that down. I saw your other super chat. Thanks for that. Airbnb, MVIS, Pigeon. Oh yeah, I said I wasn't gonna read them out loud. Okay, you win. Nicola. No. Oh man. All right. Okay, cool. Enough with the tickers. So you'll have to wait and see if you're not part of the course. But it'll be fun. It'll be fun. So it'll be a fun morning. Okay, cool. So what else are we doing here? Let's see. There's nothing going on TV. There's nothing going on in stocks because it's pretty freaking flat right now. And let's see here. Trying to decide. Okay. All right. See, let's look at I want to look at the yield curve here for a moment. Okay, so we just went down again a little bit on the 5-year. Okay, no more tickers. No more tickers, please. No more photos. Okay, so yes, private live streams, of course, members. Use our coupon code HODL, link down below. Okay, so your stock course is that lifetime or annual? No, you pay once. Yeah, you pay once. We get to chat in Discord. You get the private access to the live stream. You get lifetime access to all the content and future content in the lectures. I'm not going to obviously do private live streams for the rest of my life, but I have no plans of stopping them. But yeah, so look forward to seeing you there. So, okay, what do we got here? So 0.84 now on the 5 and 0.164 on the 10-year. Okay, cool. Well, I got some work to do. I got an hour and 15 minutes to figure out what I want to do. So I appreciate y'all being here, folks. I'll see y'all later. Thank you so much for the support. Check out those coupon codes down below. And yeah, folks, we'll see you at the moon. All right, folks.